Welcome to Finance in 5. So as you know, it's been at least 4 days since we last spoke about Michael Burry and his investments on this channel, and clearly that situation is utterly unacceptable and cannot be allowed to continue.
Can we make it 100 million?
So today, we will be exploring Burry's purchase of shares in one particular company called Designer Brands, which sells shoes, designer apparel, handbags, perfumes, and trainers, or as you guys across the pond call them, sneakers. I'm not having a go, I love that word, it's awesome. They also repair shoes and operate nail salons. So before we get into the details today, a lot of you might be thinking to yourselves, who would buy shares in this sector at all? Hasn't the market just been flooded with cheaply manufactured foreign goods and which have erased the profit margins of these sorts of companies? Well, it's a sensible concern. After all, back in 1993, one of Warren Buffett's biggest mistakes was purchasing Dexter Shoe Company. This eventually lost market share to cheap foreign competitors. What was the sale price, I hear you ask? A cool $433 million, of course. Buffett agreed to pay for Dexter Shoe Company with 25,203 Berkshire Hathaway shares, which at the time was around 2.14% of the 1.177 million shares in public issue. So Berkshire shareholders swapped 2.14% of their company for something that would soon be slaughtered by competitors. The shares they sacrificed are today trading at over $350,000 each. So effectively, Dexter cost $8.84 billion. So what would motivate Michael Burry to buy up a footwear company? As the old saying goes, fools rush in where angels fear to tread. Well, perhaps that's true, but what if the corollary statement holds, and in the right circumstances, angels rush in where fools fear to tread?
Making money is not like I thought it would be. This business kills the part of life that is essential.
We have to work out whether or not there's value in Designer Brands before we can dismiss it casually as being a foolish investment.
If you'll excuse me, Dr. Burry, it seems like a foolish investment.
Let's take a look at Scion Capital's 13F filings to see when Michael Burry bought these shares. In Q2 of 2020, when he first bought shares in Designer Brands, this was during the second quarter of 2020, which ended on the 30th of June, he purchased 575,000 shares at first for a total value of $3.893 million, which means that he purchased those shares for an average price of $6.77 per share. By mid-2020, it was clear that retail had been decimated for the most part due to lockdown restrictions. Tailored brands had collapsed, with many Jos A. Bank retail stores closing forever, as well as beleaguered retailers like JCPenney and others closing for good. So surely Designer Brands, another high street shoe retailer, would be a candidate stock to be removed from Michael Burry's portfolio for good, no? Surely Burry would sell the shares and redeploy the capital into more productive ventures such as technology or real estate. Well, you could be forgiven for expecting him to do that. However, Michael Burry actually responded in the opposite fashion. According to his Q3 2020 13F filing, Burry held a total of 1.2 million shares in Designer Brands with a total value of $6.516 million at the end of Q3, which means that he actually increased his ownership stake in this company from 1.23% at the end of Q2 to 1.97% at the end of Q3. So he purchased another 625,000 shares before the end of September 2020. It remains to be seen whether or not he added additional shares in the 3 months that ended on the 30th of December 2020, but his latest 13F filing should provide more colour on that. So Burry bought all of his shares in Designer Brands for an average price of $5.43 each. Now let's take a look at the price chart of Designer Brands during 2020 so that we can actually see when it was that Burry bought in order to get inside his thinking process a little bit. He bought when the company was depreciating, but not at the low. A lot of people look at this share price chart and think, well, it's gone up to $12 in such a short space of time. It's almost quadrupled here in value very quickly. The upside case is probably over. Actually, I disagree. I think that fair value is going to be at least $16, but we'll get into that further on in the video. Essentially, the point is that Burry bought shares on 2 occasions at an average price of $6.77, which is around here in the first quarter, and an average price here of $5.43 or so before the end of the second quarter. So those were the times when he bought these shares. So one of the key drivers of confidence in a company is expected future cash flow. And the bar chart here shows that revenues are expected to grow in January 2021 and January 2022. Designer Brands is positioning itself for a rebound, so it'll be interesting to see how close to target the actual revenue numbers are when they finally are announced. So at face value, such massive share price depreciation is likely to worry investors. But at times of crisis, there's often a great opportunity. With over 978 stores distributed throughout the United States and Canada, Designer Shoe Warehouse remains the leading brick-and-mortar retailer of shoes and accessories. It provides consumers with a diverse selection of shoes, handbags, and accessories, offering major brands such as Kenneth Cole, Birkenstock, Steve Madden, Guess, and Nine West. Its positioning in the footwear and accessories market offers a number of distinct advantages over traditional retailers. The company benefits from a competitively entrenched business, consumer defensive product line, and it's got strong resistance to online e-commerce competition. Yes, it operates in the highly competitive footwear and accessories market, and it competes with department stores, mall-based shoe stores, national chains, as well as independent shoe retailers. However, the company has held its own and is no stranger to excelling and even surpassing its competitors during its 30 years in operation. Despite strong competition, Designer Shoe Warehouse has demonstrated an uncanny ability to retain customers and to expand revenues. Some of the company's key competitive advantages lie in its customer loyalty program, as well as discounted shoe pricing and aesthetically pleasing retail stores. Unlike other retailers who have gimmicky and unappealing loyalty programs, Designer Shoe Warehouse offers a very rewarding loyalty program that saves consumers money and actually encourages repeat purchases. There are over 25 million members of Designer Shoe Warehouse's reward program, and interestingly, those members account for 90% of Designer Shoe Warehouse's total revenues. So this reinforces its underlying strength in its business because the company offers a strong value proposition that is conducive to repeat purchases. As well as strong consumer loyalties, Designer Shoe Warehouse's business is inherently defensive against online e-commerce competition. While toys, electronic items, books, and other consumer goods are accommodating to online shopping, footwear purchases do not have the same translation. When making a footwear purchase, consumers overwhelmingly want to make sure that the shoe is the right size for them. They want to visualize how it fits, and they want to compare it to other footwear options. Over 60% of consumers prefer to purchase footwear in stores as opposed to buying it online. So as a result of all of this, Designer Shoe Warehouse benefits from inherent resistance from digital disruption, as well as inherent physical store advantages. Designer Shoe Warehouse also has embraced digital shopping, in that the company has an online shopping buying channel where customers can place orders online, pick them up in the store, and even have them shipped directly to their homes. But let's talk as well about Designer Shoe Warehouse's unique buying experience. It's invested a lot of money in updating the look of its stores to provide customers with a modern, aesthetically pleasing purchasing environment. Updating and reinvesting in the company's store appearance should have positive implications on a consumer store preference, engagement, and purchasing decision spaces in the years ahead. From a revenue standpoint, Designer Shoe Warehouse has experienced year-over-year revenue expansion for the past 2 decades, which reinforces the stability and predictability of the company's business model. If you think about it, what could be a simpler value proposition or fundamental business idea than selling shoes? It's a product that's always going to be needed long into the future. Designer Shoe Warehouse's consumer defensive footwear products are also somewhat shielded from the seasonality of other retail peers, such as Macy's. Other retailers exhibit a precipitous decline in revenues over the winter months. Designer Shoe Warehouse absolutely doesn't. It witnesses much more consistent revenue performance throughout the year. However, the picture isn't entirely rosy. Let's not delude ourselves or dwell in a fool's paradise. Designer Shoe Warehouse had maintained year-over-year increases in revenue and stable net and gross profit margins until 2020. However, 2020 was the year of reckoning, to say the very least. Quarterly revenues plunged 35%. We saw operating losses and a significant expansion in debt. the company assumed a significant amount of debt between 2019 and 2020, going from a neutral debt position to having $400 million in debt. At the same time, debt is reasonably well covered by operating cash flow. Designer Shoe Warehouse's margins have remained fairly steadfast over time, staying at about the same level for the past 5 years. However, revenues have steadily increased over the past 20 years. Business difficulties in the near term are understandable given Designer Shoe Warehouse's business model, the fact that the company mainly targets the professional and casual footwear segments, which were disproportionately affected by the virus. In the midst of COVID-19, especially within the professional segment, many workplaces moved remotely. Consumers weren't going out at much, people were working in their slippers, dress attire, specifically new shoes, weren't as prescient a consumer or professional discretionary spending item as before. Perhaps the biggest business vulnerability Designer Shoe Warehouse has faced has been its negative developments in consumer demand. But in the face of all of that, we've already seen the worst of these developments. We've got people talking now about going on holiday this summer, the most severe lockdowns and restrictions being eased, moving forward with positive developments in vaccination and social distancing, personal protective equipment and more. The trajectory of consumer and professional behavior in the longer term is that of resuming to a prior state of business and everyday life, perhaps with some special provisos. This seems like a particularly likely development for the springtime and moving ahead. Difficulties associated with weakened demand should only be temporary difficulties at best. We're not likely to see these difficulties posing persistent future problems. So how do we arrive at a valuation? Great question. At Designer Shoe Warehouse's current stock price of $12 a share, the negative factors that we've discussed effectively have already been priced in, and don't forget that this stock has been rising in recent weeks. This is a reasonably good discount which offers a fantastic risk to reward proposition. The stock is undervalued by at least 30%, well below the future cash flow value of around $15.50. So, Designer Shoe Warehouse is a heavy hitter in professional footwear. The company is underpriced. It exhibits a track record of sustained performance. The product line and the overall business are resistant to competitive erosion, at least for the medium term. Sure, in the short term, the company is going to experience difficulties from the professional footwear market. But in the springtime and beyond, the outlook is good, and we're likely to see a turnaround in its revenue, a restabilization of demand, and capital appreciation moving on. So I don't know when Burry is going to sell his shares, but I would venture to say not yet. Thanks very much for watching this presentation. If you enjoyed it, please like and subscribe and comment down below. And I look forward to seeing you again in the next video. All the very best. Thank you very much.